Good morning, everyone. My name is Shubh Sharma, and let's start with our pre-market analysis. Now, let's start with US market. We'll discuss what happened in US market in detail. Now, if you look at Dow Jones, Dow Jones fell by close to 784 points. On the other hand, Nasdaq fell by 73 points, and S&P 500 fell by 38 points negative, closed in 38 points negative. Now, there are a lot of things we have to cover. So yesterday, the oil prices, there's been a crunch of oil stacks in India. So US has given a 30 days of waiver that they can buy oil from Russia. Earlier, the US and trade deal happened only on some conditions, and one of the conditions was that India will not buy any oil from Russia. But looking at the geopolitical situations, the US has given a waiver of 30 days, that for 30 days they can buy oil from Russia. So this is a good thing. So yes, India can buy oil from Russia for the next 30 days. So this is the one news. Now second news is yesterday the US market fell mostly because of inflation risk, the price hike risk, and the oil prices which has been increased. So because of which the US market fell, and today the US job data will be out. So because of which that also concern the US market collapsed. So yes, this is the main thing. Another important thing, look at what Trump did. After the Iran strike, the Trump said the next country in his radar is Cuba, and it's just a matter of time that they will take decisions on Cuba. I don't know what Trump mindset is, I don't know what Trump is thinking, but looks like once they are done with Iran, second country in their radar is Cuba. So all these situations, all these circumstances leading the market to collapse in real time. So this is the few things that we have to look into and watch it very, very closely. Now let's talk about FII and DII data. Now look at FII numbers. Yesterday, FII in cash market, they sold close to 3700 crores. DII in cash market, they bought close to 5153 crores. Now SGX Nifty showing a gap down opening of close to 200 points something. Yesterday our Nifty gained close to 223 225 points. To be precise, 247 points we closed in green. Today only we are opening at 200 points gap down. So we are losing everything what we gained yesterday. This is called volatility. This is why my view is to stay away from market for some time. So looking at SGX Nifty showing a gap down opening of 200 points. Now Brent crude is at $83.66 per barrel. Crude oil is at $79.2 per barrel. Look at USD INR, rupee in comparison to dollar. It made again a trading at low close to 91.6. So these things adding up for the collapse in Indian market. That is why I have no long positions whatsoever in any stocks, in any indexes. Looking at the SGX Nifty, we are opening a gap down opening. So imagine those who have bought call options and holding it overnight. Today they'll be opening at loss and they'll be squaring off positions, and the panic will create again in the market. Yes, like I was saying, don't short here, right? And don't take long position here. I've been telling you from past 2 days that we can see some bounce, right? This is not a recovery. This is just a dead cat bounce. Same thing happened in US market. Day before yesterday, a dead cat bounce came, and look at what happened yesterday. It lost all its gain, right? Same thing, look at what happened yesterday. Nifty closed at 247 points positive, but today we are opening a gap down opening of 200 points. So whatever we won, whatever we gained, whatever we climbed up in Nifty, we lost everything. So now the support is emerging at 24,000, big support. Small support is at 24,300, but still I'm not convinced that 24,300 will be a good and strong support. No, I don't think so. 24,000, yes, holds a strong support, but not 24,300. We can even break 24,000 or 24,300. Now the resistance is 25,000. Closing in Bank Nifty, look, let's talk about Bank Nifty. Now Bank Nifty closed at 59,055. It closed above 59,000, but still we are opening a 200 points gap down in Nifty, we can even open 400 points gap down in Bank Nifty. It's always double. Now the support is 58,400 and the resistance is, now I'm talking about in Bank Nifty, is 59,500. So yes, 58,400 is the support in Bank Nifty and 59,500 is the resistance in Bank Nifty. We are opening a gap down, so yes, 59,000 also will act as a resistance in Bank Nifty. So this is my view. This is what I think. Yesterday, if I talk about some stock specific, there was later half, around 2 to 3 o'clock, the market recovered. Now the reason why the market recovered is because the Iran proposed to US government that they will stop its nuclear development under some circumstances, and if US will give them good deal, then only they will stop the nuclear development. Because of which this positive news, everyone expected that the war will be, attacks will be stopped on each other and the civilians will stop getting killed. Now that is why the market recovered and it closed in 247 points positive. So this was the reason. Now if I talk about stock specific, yes, there was profit booking in major sectors, but some stocks were doing good. So focus on stocks which are doing good. In these, look at metals. Yesterday, remember I told you metals. Look at Hindalco. Hindalco was shot up by 40-45 rupees. That matters a lot, and it even opened flat, right? And then it shot up like crazy. So focus on metals, focus on Vedanta, Hindalco, SBI, Canara Bank. These are the safe stocks in these market. Yes, we saw some correction in SBI, Can Bank, but still I think they are the safest amongst small and mid cap. So stick with metals, stick with SBI, Canara Bank, Bank of Baroda. These stocks are looking stronger as compared to other stocks. So this is my view. Still, it's a wait and watch market for me. I'm not expecting any big momentum in the market as of now. The money is always on the short side currently for the very short term. So yes, let's see how market will react at the support levels, and then from there we'll take the decisions. I hope you would have learned a lot. I hope you would have taken the notes. I'll see you in the next video. Bye bye and take care.